This is Gibraltar Today. Right, last week the Minister for Financial Services, Nigel Feetham, made this announcement.
It is trading income, and we set out to clarify the law to allow such behaviour to be taxed without costly enforcement action.
So basically, investors with 3 or more properties in their portfolio, not including their primary residence, will be subject to a tax on profits or gains. We're told it's not a new tax, it's a clarification of existing legislation. But I think some people will start being taxed when previously perhaps they weren't being taxed. The measure was announced during Mr. Feetham's budget speech. He said that the tax will target wealthy individuals who drive up prices by buying and selling property like a stock market. So that framing has resulted in many people, I think, welcoming the decision to try and discourage people using Gibraltar's limited property as stock market. But will it curb investment? How has it been received by those who facilitate developments and help to sell on properties? Luis Montegriffo is the managing director of BMI and joins us now. Good afternoon, Luis.
Good afternoon, Jonathan. Thanks for having me.
What are your initial thoughts?
I guess a little bit shocked, to be honest. It wasn't something that we had been expecting. So initially, shock. Obviously, then we've listened to, I think, the limited detail insofar as what's come out. I think there are various aspects. One of the things that was mentioned, and I think you've mentioned now, is the trading of stocks, trading of property. That's been obviously going on. It's part and parcel of any property market, particularly a booming property market. We've had essentially a booming property market in Gibraltar for the past 25 years or so, with dips here and there, but generally on the up. The element of trading, particularly off-plan trading, of which we've seen many off-plan developments being developed over the past 20 years, but specifically, I think, in recent times as well. I can, to a degree, as much as an estate agent or involved in property wouldn't welcome any tax on anything which is related to property, I can, to a degree, understand where the government is coming from insofar as flipping trading prior to completion of properties. So people purchase a property almost like an option agreement, pay 10%, 15, 25% over the period of construction, and prior to construction sell. They've only put in...
Have those people effectively been helping to finance the development?
There's suggestions, obviously, of mezzanine finance from that perspective. Look, I think there's always a need for different types of buyers. Owner-occupiers who are buying to move in because there's a demand for them and a need for these properties.
But those are the most important people,
and those, for me, have always been the drivers of the market. When you've got a situation where potentially you've only got speculators and you argue that is the way to mezzanine finance and to finance a development, I think that's probably pushing the boundaries a little bit too much, because one needs to understand that there has to be a market there for these properties to be successful generally. What you end up with in, if you like, forcing or overheating the market in trying to attract lots of speculators, whether it be on, for example, I think the main speculative investment on property recently has really been studios. They're cheap. They're attainable.
Well, sorry, I can hear lots of listeners saying right now, they're cheaper. They're not cheap.
They're cheaper. My apologies. Yes, they're cheaper from a visual perspective. If you've got a £190,000 studio, £200,000 studio, that is seen visually as cheaper than spending $500,000, $1 million on a 3-bedroom. Because you pay these installments of 10, 15, 25%, it's attainable to a lot of people. And they can be drawn in by the possibility of making money. A lot of people have been doing that. I think to a degree, the idea behind what government is doing, what the Minister of Finance is imposing and implementing, you could argue that the party's over on that one because the market really peaked in 2022. We saw a period of 18 months where there was a frenzy of sales, and of course a lot of people buying and selling and making money. Not so much now. In fact, we're in a very different situation where you've got a lot more in the market, far more than we've ever had before. There's actually a decrease in prices, which we talked about, I think, a few months ago when I was here and spoke to you about these things, where we've seen a decrease in price of between 10 and 20%. That's not to panic about, because we saw an increase in prices over 2020 to 22 of up to 100%. So this is more of an adjustment and a realignment, which is what we were here to discuss a few months ago. But insofar as that flipping is concerned and trading, I can understand where government is coming from, in that taxing or having those measures in place, one, will make those who are speculating and just speculating to flip think twice. And two, look, if there's money to be made, ultimately for buyers to go in on a very easy flip and come in and out, I think, I'm not going to say it's justifiable, because it's not something I would have gone for, but I can understand the measures that are being taken. The Chief Minister has also, just to add to that, implemented 0.5% stamp duty on sales, essentially to assignors of flipping an off-plan investment. So there's already that in place as well. This is in addition to. I think insofar as the detail is concerned, one has to assume, given that it's part of legislation,
that there is no detail yet, really, no?
Well, no, and therefore one has to assume that any tax paid is going to be based on corporate, which is 15%, or personal, which is plus 20%. So going back to those two phases, or the first one I've described, which is the flipping, I think, not entirely happy with it, but I can understand the sentiment. I think where...
But if you don't mind me interrupting there, Lewis, for people who are struggling to find a property, and we've spoken to plenty of people in recent months who are struggling to find a property that is adequately priced or priced, at a level that they can afford, to hear that people are driving up prices by effectively people with significant funds themselves. They are making more money and making it harder for those people who already find it hard to get onto the property ladder to do so. Yeah. It's a real slap in the face, no?
I can understand, again, what you're saying. I don't think it entirely works that way, because in developments that we've been involved in, many for the past 25 years, Europlaza, Atlantic Suites, Midtown, King's Wharf, etc., what we found is that where we've had owner-occupier driven properties, we've had people who want to move into these properties as owner-occupiers, many Gibraltarians who've bought. I think what you're saying is, does this prevent...
These are not the people who are flipping.
Well, this is it. Ultimately,
well, they may be, but not in that instance.
They will do if the market goes up, and I don't think you can dictate. I've always said let the market drive the market. So I don't think we have a right across the board to dictate what prices should be and what the market should do. It should be driven by demand. I do think that we've attracted, particularly with certain segments of the market, and particularly smaller units, of which there are many out there, we've attracted a lot of speculators. And I think what's happening now, it's almost like the gardener telling the stockbroker what stocks to buy. A lot of people have seen a lot of people make money in property and therefore want to jump into that ladder because they've seen it happen before, so to speak. And I think that's now, to a degree, slowing down. I think certain people in the industry are almost forcing the issue because it's there. It's, I think, a little bit dangerous. The market generally has slowed down. Prices have softened. So like I said before, I think insofar as taxing those people trading, I think the party's over. I think there may be another party soon, but it's over from that perspective. But what's more important from my perspective is the impact not on people who are flipping. And like I said, I don't entirely disagree, and I understand the sentiment.
How many are there? How many people do you think, I don't know if you can actually put a figure on it, but who own more than 3 properties who would now have to pay?
There are substantial portfolios in Gibraltar, but that's the key question when you say who owns. Flipping is one thing. What's important, which goes to your question now of how many people own 5, 10, 15 properties, 5 million, 10 million, 20 million pounds worth of properties. Various different profiles, individual investors, fund managers, property funds, family offices. Generally, those are the types of clients that you've got. Now, you may have some of these individuals, companies, fund managers, family offices that have been in Gibraltar for 5, 10, 15, 20 years, have accumulated property, not because they want to flip them, but because they want to have them as an investment. Gibraltar has always been an attractive place to come to invest in for all the reasons that we know. And they're now potentially subject to owning a portfolio where if they want to, for example, sell one or two of their properties to refresh their investment, for example, to still keep the money in Gibraltar because they've been renting this portfolio, which has all to serve the purpose to Gibraltar and its market. There are many people who come to Gibraltar within the finance centre, gaming, insurance, any industry, will rent initially. So there has to be a market for that. Is it right, or rather, should we maybe think a little bit more carefully about how we implement any sort of taxation to individuals, companies, family offices, etc., who, in good faith, yes, because they've wanted to invest in Gibraltar, own a portfolio and now may be subject to being penalised by what is essentially a capital gain on that property, which doesn't exist in Gibraltar, where Gibraltar has been successful in attracting people, and it's all about the optics as well. We've got existing portfolios here.
Let me put the opposite to you. Why not? Why shouldn't they pay tax on that?
I'm not saying that we should completely overrule any tax. What I think needs to be clear, and what needs to be looked at, is 15%. And the manner in which it's been done, applicable and proper. Again, I'm not saying that we ought to do it. I think one of the successes Gibraltar's had historically is we've been low tax or no tax in these situations. There are many other benefits from attracting the big investors. So I think there's a big difference between someone who's flipping a property and someone who is investing in a property, holding that portfolio, yes, serving his or her own purpose as a portfolio owner, but also providing a service that's also required. And I think it's wrong to now say, hey guys, overnight, you're going to be paying this amount of tax. Again, I understand where the government is coming from, but I think we need to be careful of the implications. Also, the optics externally.
Which are what? What do you think? I mean, do you think it's going to be significant enough? We don't know, as you say, exactly.
Well, I think potentially
the
it's significant to the degree that anyone who might be, Labour government has just won a landslide election in the UK. Historically, any Labour government has led to potentially increase in investment in Gibraltar because there are people who will maybe not be happy with the potential of increased taxation in the UK, etc., and they will look to places like Gibraltar who have benefited from those situations. So potentially you may have portfolio managers, you may have family offices, investors looking at Gibraltar who've now seen a headline of taxation on property, and I think they may think twice. And of course, you've also got to look after, or at least consider, the ones who are here,
but they'll
who've invested already.
They'll look beyond the headline, won't they? I mean,
it's a pretty big headline. No? It's a pretty big headline. Well, I don't think they'll look beyond it.
It's not even, according to our reading, it's not necessarily even new per se. It's just a clarification of what people should have been doing.
Well, I think that's subject to interpretation. Clearly, to date, it hasn't been implemented. The fact that now it's been announced as we are going to implement, and we don't really have the finer detail, is a wide program, is a wide scope. I think maybe more detail would be welcome. But all I would say is, whereas I'm not here to say do this or don't do this, I would say I can understand the sentiment insofar as flipping. That's been addressed in part by the Chief Minister with regards to the 0.5 stamp duty.
Yeah.
The fact that they may want to implement more is entirely up to them, and I can understand again the philosophy. Where I think we need to think a little bit more carefully on is, should we penalise people who've invested in good faith in Gibraltar over the past 10, 15, 20 years, where the market has grown over that period by well over 1,000%. So, some people could be up for some pretty big taxation if they wanted just to sell one property in their portfolio to reinvest it in another. I don't think those things necessarily drive the market up. They are what they are as part of how the market's progressed and matured over the period.
Well, as more details emerge, Lewis, we'll have to pick your brains again. But thank you so much for joining us today. Lewis Montegriffo of BMI.